What is going on, you guys, and welcome back to the channel. Today I have once again Adriano joining me. Adriano, what's going on?
Hey Brandon, nice to be on your channel again to talk about some whatever income investing. I know your audience has some questions. It's always a pleasure to come on your channel and collaborate with the OG himself.
You always say that, but hey, it's
But
good
you
to have
are,
you
you
back,
are
bro.
though, you are though. Even though you're like the
Thanks.
youngest out of all of us, that's the best. That's the funniest part.
Well,
How was your
now
trip, by the way? Just got back from Japan. How was it?
I'm just getting past the jet lag. So I got back a couple days ago. I don't get jet lag too bad, but the first day was kind of rough. And it's just like, man, it's nice to be back at your computer. And like, it's tough when you're abroad. Different for you because you have a home base there. Like, I guess you're home now. But when
Yeah,
you're
it
like
is. Yeah,
traveling, it's just nice to be home. So, and I got a lot of catching up to do. So
awesome.
but anyways, man, thanks for the nice OG comments. That always makes me feel good. We have some questions that I asked my audience. So on Instagram and then on YouTube. I made a community post because every time we have you on, there's a bunch of good questions that come in the comments. And like I'm not necessarily as qualified to speak on those. You're the expert when it comes to this, passive income space. I'm like, let's just ask you straight up what your opinions are on these and whatnot. And sorry if I didn't get to your questions, guys. I can only maybe pick a few, but I have them here on my phone. So can you hear me still fine?
Yeah, I hear you
You can
good.
hear me? Okay, okay. I just didn't want to make sure this connected to the phone.
No, you're
Let's
good.
start with this. Let's start with the question that I think everybody's asking.
Sure.
Everybody will ask.
Let's do it.
How do you how do you combat long-term capital erosion? Another version of this question is, are you worried about capital depreciation when investing in covered call ETFs? I know we've touched on this if you've watched, our previous segments, but maybe give like a for somebody that's brand new and they're just hearing about this, what's your take on that? How do you approach the capital depreciation?
Yeah, probably the most common concern question I get. So I've been trying to figure out how to answer it best I could. What I'll say first is that it's pretty hard to understand the strategy if you're not in it. That's the first thing I will say. But the people who are in it that have been in it for a bunch of years, they understand what it's really about and know how it works, and they're not worried about this. So let's talk about that. So Nav erosion, I recently made a video that actually got a lot of views, pretty controversial. I knew it would be. Nav
Mm,
erosion is a myth, and I explain why I
mm,
go through it. But basically, what the general premise behind that video and that idea is the high income that you're getting from these funds, whether it's 10, 11, 12, sometimes higher if they're leveraged funds, that yield that you're getting, those dividends, that's you have to count that as part of your return, right? You can't just look at your capital and just focus on the capital. That's typically what growth investors do. So what I usually say is, look, if you're looking at a stock like Amazon or Tesla, something that does has no dividend, that doesn't give you anything, you can look at the stock chart all you want. It's just buy low, sell high. That's the only way you'll make money or lose money. But when any dividend stock or ETF, especially the high yield one, the ones that are the covered call ones, especially, most, if not all, your return is coming from the income, not stock appreciation. So you can look at it this way: if a stock just is giving you 10% yield and the stock price never moves ever, that's a 10% annual return every year, which is about what the market on average gives you, right? About 10% long term on average. So it's really the way you look at it, right? These funds are
perspective.
perspective. Yeah, they're
I was gonna say the
designed.
perspective. Yeah.
Yeah,
I guess
sorry, go ahead.
one of us get.
Go
I
ahead,
guess
you go.
is it fair to say that I guess a lot of the bashing that comes from this is that people come in with the wrong perspective. Like they're not coming in
Yes,
with that understanding that hey, I'm actually an, I'm a t- I'm trying to get my return via the yield. And like maybe I'm just again I'm trying to put myself in the eyes of maybe a new investor or someone who's new to this space. Maybe they're not expect. A lot of times people tend to think dividends are like bonus money or extra money, which is just far from the
exactly,
case. It's
exactly.
actually just it's the means of how you distribute those returns, whether that's through capital gains or dividends. If someone's coming in, not understanding that these funds are meant to spin off income and their sole purpose, like literally in many cases, their sole purpose is to do so, because they're coming in with the wrong expectations, then they may not be pleased with the results. Is that maybe a fair way to say it?
Yeah, it is. You have to have the expectation. You have to understand how these funds work, and the majority of your return is going to come from the income. So if you're worried about capital depreciation in your account, there's a lot of things you could do if you're really worried about that. You could reinvest. Obviously, if you reinvest your dividends or reinvest the whole thing, you just turn everything on drip, which a lot of my community does. That's where, a big advantage of this style of investing, you have a lot of flexibility. You could drip all your units, so all that big dividend, that 10% yield is being reinvested, and it's causing this big compound effect that helps keep, that will bring up your value. You're essentially turning your income investment into a growth investment, but not really via capital appreciation, via compounding interest, right? You heard of the dividend snowball. Think of this like
Of
the dividend
course.
snowball on crack, right? Because it's typically double or triple the yield. Then there's other ways you could do it if you're really worried about, your capital going down in your account. You could drip. The dripping is the best way. You could drip a portion of it. You could have a
So here's
hybrid.
here's a question for you. Here's a
Yeah.
question for you. Like you personally, do you care whether your capital goes down in the sense of if you're looking at, total dollar figure of your account, you're pulling out your income, is that like does that matter to you? I mean, to some people it may. Or do you just say as part of this strategy, there will be capital appreciation. You've accepted that and that's just part of the strategy.
I would say the second thing you said is more correct. I really don't care. What matters for me is the consistent income that my portfolio is generating. As long as that's intact, that's what I'm living off of. So the best analogy is if you buy an apartment building, right?
Mm.
And you're going to hold it forever. What really matters, it's really the rents coming in, it's that cash flow coming in. You're going to hold it for 10, 15, 20 years. If your apartment building, the value of it is going to go up and down with the real estate market, but you don't really care. All that matters is the rent. So it's kind of the same concept. So me personally, I'm okay with going all income investing. Some people are more comfortable doing, they'll do 50% income and they're okay with that income, but the rest they'll put it in growth ETFs or passive index ETFs. Or another strategy is they'll take the income that they're getting, that high yield, and they're gonna buy index funds with those every month. So
Mm.
there's a lot of ways you could combat that value going down if you're really worried about the value going down over time. It also depends on the funds too, right? Some are more aggressive with the covered calls or they give out more income. So if a fund, and especially in the US market, there's these funds that give 50, 60% yield now. Of
Yeah, I
course, you're
can't
going
wrap
to
my
see
head
a
around those, but yeah.
of course, you're going to see a gradual decline, especially on the X date, because on the X
Mm.
date every month, they're giving you that massive distribution. That's coming out of the NAV. So that day, you're going to see a big drop in your share price, but you're getting that massive dividend. But that's why, that video, the premise is that dividend is part of the return. So if really capital preservation is your number one concern, well, you got to reinvest that distribution or reinvest a portion of it or be a hybrid investor. So
Right.
it's kind of complicated it's very easy to understand when you're in the strategy, living it and looking at it. And I give you a perfect example. I recently did a video of a guy. He made a Facebook post in our group, and he invested like $1 million
Mm.
full in PII, the income funds. And after 2 or 3 years, he's down to $800,000, the value of
Yeah.
his portfolio,
Hmm.
because he's been literally living off and spending all the income. And throughout the 2 or 3 years, I can't remember the number of years, he calculated that he received $300,000 in income. So
Mm.
you can't look at it as I'm down 20%. You got to look at it as you're up 10, because yes, your capital is at 800K, but you made 300,000. So it's really 800 plus
Absolutely.
300. You're at 1.1. So that income, that's what I mean when I say you got to consider the income. If you look at it, the stock charts, whether it's a dividend stock or a dividend ETF or a covered call ETF, you don't see the income in the stock chart, right?
That's
You
right.
you got to look at the total returns, not the stock price return. Different thing.
That that makes so much sense to me. I really like that last example. Like it's and I've seen that before as well. So no, thanks for sharing that. Okay, question number two I have here for you.
Yeah.
this one, I guess, was more so about you and your strategy, because the Hamilton RB comments, I have a hard time calling his portfolio a buy and hold portfolio when he's constantly replacing ETFs
Yes,
monthly or with
yes.
different ones, referring to it as streamlining. If it is a true buy and hold, and you bought quality to start with, you shouldn't have to streamline, change up the portfolio, blah blah blah. I have a mix of dividend and covered call ETFs in my equity portion of portfolio, and I haven't had the need to change them in 3 years. What do you have to say about that?
Yeah, it's a common question I've been getting lately because I have been modifying
Mm,
my portfolio and streamlining. I've been calling it streamlining. So my argument is, look, when I invest in something, when I want buy something, I ask myself, could I buy and hold this forever? Is it going to pay me forever? Could I buy and hold it forever? So that is really what I mean when I say buy and hold investor. I'm not buying something to sell it later for a profit, to buy low and sell high. I'm really buying it like an apartment building. I'm buying it to really collect the income every month, but
with the intention of holding it long term
with
is
the
what you're saying. Like
intention of
you're
holding it
not cut.
long term. But now with all the new ETFs coming out, all these I mean the covered call space has exploded in Canada in the last
It
three
has.
years. If I see a better option, whether because
Yeah.
I like the fund manager better, I like the covered call strategy better, it's a leverage version. A perfect example, Horizons just launched some leverage versions of
Yeah.
their existing covered call ETFs. I had ENCC and I sold it to buy ENCL, which is just the same thing but a leverage version because I'm comfortable with the leverage. So when I see an opportunity to make my portfolio either slimmer, more efficient, more efficient by
Streamline.
means.
It's like streamline. It's literally the definition of streamlining.
Yeah,
So
exactly.
I guess to one it may to one who just maybe not following you closely, it could look like you're jumping in and out, like, oh, I'm gonna do this. But essentially, it's your approach is still long term buy and hold. It's if I see a better opportunity, it's logical to essentially move to that, and that's where these changes come through. It's not like you're like swing trading between different ones that
No,
to capitalize. So I think, from my understanding, that sounds like a very fair, but it is a buy and hold strategy. But that doesn't mean that you just like lock yourself out of every other investment for the rest of time because you've essentially
yeah,
bought something. That's kind of foolish, actually.
exactly. I'm not investing in GICs, right? I could, if I see an
Right.
opportunity, I could streamline. And typically, when I do a move, it's very similar exposures, right? If I see it's going to be something very similar with very similar stocks. Maybe I like the strategy better. Maybe the yield is higher. Maybe because it has monthly distributions instead of quarterly. So there's a lot of reasons, and a lot of people in my community they see these streamlining opportunities because so many great ETFs have come out, and we'll talk a little bit
Mm.
about it later. But there's now a lot of index based covered call ETFs. Gone are the days where you have to get I need a healthcare, I need a banks, I need an energy, I need a utilities. Now there's literally S&P 500 with covered calls, TSX
Right.
60 with covered calls, or now there's even give me the whole world with covered calls. So it's a lot of people in the community have been streamlining, including myself, just to make their portfolio leaner, more efficient, and for a bunch of other reasons. But when I do buy something, my intention really is to buy and hold it forever. Will it pay me forever? Does it, is
That
it for
makes
my
sense.
needs? But if I see something better, of course, I'll streamline into it, right?
That makes total sense. Yeah, I think that was a good question from Hamilton, and a good response as well. That's what I assumed
It
you'd
is a
say.
good question,
But
yeah.
yeah, these have all been really good questions, by the way, guys. Maybe we'll do one more, and I guess this one's a little more lighthearted. Someone, Ruskin DG, just asked, how do you simply track, your monthly budget? Like I assume you have, let's say, your different funds and you have all the different incomes coming in. How do you track that? Do you track it very meticulously? In terms of exactly month by month how much you're getting, does that fluctuate? Yeah, do you have a system
I
for that?
do. I do track it meticulously because my investing strategy is all about the income, right? I want to know exactly how much income is coming in. This is kind of like my paycheck. So,
Yeah, really.
I working class family, it's all about that consistent paycheck. So my portfolio, I consider it kind of like my job that pays me that I don't work for, kind of, if that makes sense. It's still my primary source. It's my bread and butter. So I track, and every month I release my most popular video, portfolio unveil,
Yep.
my yield, my income, exactly how much income I get. I track all of that. So I gotta know how much income is coming in every month. So yeah, I have a video every month. I do an update, portfolio update. I think I'm at like 31 or 32 or something like that. So I do track
Yeah.
it meticulously. Yeah, with Excel, by
And
the way,
those
simple
and
Excel
those
file.
are there you go, Excel. Yeah, always reliable. Well, that's for my followers who haven't watched Adrian. Like that's I think some of the first videos I saw of yours, and when I go through, it's like those are the ones I watch too. You know what I mean? It's like those are the most I think valuable in the sense that you just open up the hood and just show exactly what you're doing and how things work. That's what people really resonate with is when you just like you just show the goods, right? It's
Yeah, I
and I
black and white, nothing to hide. The channel
yeah.
is really about my investing journey, and I feel like, look, if you're gonna start a YouTube channel on investing, you should show what you're doing and exactly what's going on month to month. So it's a monthly update, and I show everything under the hood, the values, the monthly income, any distribution increases or cuts, or any news, any moves I make, anything that I've streamlined, everything. And you could download the my Excel file for free on my website, by the way. Every month,
There you go.
I
So
update it. You
download
could just
that.
download it.
Go download Blossom. You got the best of both worlds. You got to see a little bit of
Blossom as
everything.
well.
That
It's all
there you
every
go.
the day of the unveil video, I update the Blossom, so it's all in Blossom as well. Yeah.
Beauty. Well, hey, why don't you kind of transition there? Thanks for answering those questions because, again, I wish I could have got to like a million questions from you guys. I actually just made the post this morning. So I don't know if everyone got the chance to do it, but hey, if you guys have more questions for Adriano, leave them below this video. And then on our next video, because we do these from time to time, then we can add this next flow of questions in. But maybe
Anytime.
briefly, like, is there any updates that you would share just from being, all up in the scene? Any notable things, I guess, in the income, yeah, I don't even know the right term, in the
The
passive income
income.
space that
Yeah,
what is
the
it? The
income
income
world.
world?
So
The
the
income world.
income
There you
world
go.
absolutely has exploded, especially in Canada, in the last couple of years. But in 2023,
Yeah.
I'll focus on 2023 specifically. I think the best way to describe it is it's really an explosion of index-based covered call ETFs. So like I
Mm,
talked about earlier, 3 years ago when I first started, these things didn't exist. You had to buy the six banks with covered calls and healthcare with covered calls, utilities. So you had to have a lot of stuff in your portfolio. Now, let's be honest, index investing, right? Just buying a TSX 60 for Canada or S&P 500 or NASDAQ for the US. It's very popular and it works really, really well because it's
yeah.
really hands off. So now we kind of have the same thing in the income world where it's literally you have that index, which is always changing and always moving to give you the best exposures of the
Hmm.
top stocks with covered calls, some of them with covered calls and leverage or without the leverage. So you have a lot of options. So I could share my screen and just show you really some of what I feel are the biggest breakouts in 2023. Horizons
Hmm.
ETFs, pretty popular ETF provider, has launched the most ETFs. I feel they launched like
They had a
14 or
big launch. Yeah.
15 of them. So and they renamed a lot of their ETFs and rebranded them. So in the income world, you literally have USCC and USCL. This is really it's pretty much S&P 500. Okay, it's not
Right.
exactly the S&P 500. It's kind of their own index, but if you actually look at the number of companies, it's like 500. So, it's pretty much S&P 500. So you have USCC is just S&P 500 pretty much with covered calls, up to 50% coverage, which means you will participate in 50% of the upside by default, but
Mm.
50% of it you don't capture the upside if the market goes up, but you get compensated with that yield. So you see that yield's about 11 and a half, and now you have a leveraged version and the yield is about 25% more, so it's over 13% yield. So they have
Mm.
this one, you have a Nasdaq one, QQCC leverage version just came out, QQCL. Here's the overall Canada. This is basically the TSX
Yeah.
60 with covered
Yeah.
calls, 10% yield. Very simple to understand, right? Top 60 companies,
Hmm.
Enbridge, Royal Bank, TD, Couche-Tard, all of those guys, the good stuff. They have a leverage version. So the index ones have really made a big splash in 2023. You have Evolve. They have literally S&P 500 officially with covered calls. You're looking at about
Right.
9% yield.
Mm.
ETSX, TSX 60 with covered calls, right? 10 over 10% yield because Canadian market is doing not as great, and as things go lower, the yield is that you could get is higher. But one thing that might be interesting for your audience, which is probably more dividend total return, is that I'm sure everyone knows XEQT and VEQT, right? Give me
Yeah.
that one-stop shop. Give me all the best stocks all around the world, 100% equity all around the
Yep.
world. So it's a combination of index ETFs. Well, Horizons has HEQT, easy to remember, right? Because it's always EQT
Yeah.
at
Yeah.
the end.
Yeah.
And by the way, I will have to say HEQT is actually outperforming VEQT and XEQT, but it's
You don't hear about it. Yeah, you don't hear
you don't
about it
hear
as
about
much.
very similar ETFs, but check out what they just launched. HEQL. It's literally HEQT with 25% leverage. So I think this is a game-changing ETF for total return and growth investors, because if you're young, if you're going to be holding something 5, 10, 15, 20 years, something very, pretty safe because you have the best index funds to capture all around the world. Now you could get this one, it's 25% leverage. So if the market goes up like it's been doing for the last 100 years, up over time, you'll
Hmm.
probably get more total return with this leveraged one. So leveraged version of an HEQT. Very cool. I think your audience would like that, especially if you have a lot of time in the market, right? You'll get 25% more volatility, of course,
Yeah.
but you should have more growth over time. And that's the first game changer ETF that Horizons recently launched. The second one is EQCL. It's basically a covered call version of, or an income version of
Mm.
HEQL. So now, even in us income investors, let's say you just want to buy, I get asked all the time, Adrian, can I just buy one ETF that has everything? The answer is now yes. You have
Yeah.
EQCL for income investors. So I find, Horizons, a lot of really cool launches this year, a lot of index based options, things that growth investors always had access to that now income investors could have. You just add covered calls to it. That's basically the difference. So you're giving up upside, right? You're capping your upside potential for that consistent income. That's pretty much what a covered call strategy is. So pretty cool
For sure.
ETFs. Yeah.
I'm
Um,
just saying, I'm literally like, I mean, even as you go and explain these, it almost ties back to that streamlining question that you mentioned, or that was asked,
exactly.
right? It's like
Exactly.
literally, these are to me, it's so logical. If you are someone looking to get into this space, this seems just like the easiest. I want a one-stop shop. I want an index-based approach instead of going in and buying. Again, some people actually may prefer going in and buying individual sectors, similar to how if you're building a portfolio, not in the passive income realm, some
Yeah.
people like to be a little more nuanced and have a little bit more control. But I think for the vast majority of investors, keeping it simple and essentially going to these, the more high level solutions, that's like, these are really cool to bring, to my audience's attention, because half of these I actually had no clue about, and they are definitely cool advancements in the space that keep
Yeah.
it very simple.
That's why I really love do-it-yourself investing, because there's no shortage of combinations, right? You could get like
Hmm.
50% in this one, but you could also put 50% in HEQL. So you have a 50% growth, 50% income, 75-25, 70-30. You do whatever fits your needs at your specific time frame and your style and your goals. And then you could shift it. And, all you need is really one or a couple of ETFs, and that's it. So pretty big
Hmm.
year for the income world. Another style of ETF that six of them came out is covered calls on bonds, U.S.
Yeah. Yeah.
government bonds. Who would have ever thought you could write covered calls on that and
Yeah.
make 10% plus yield on the most boring asset class? I know your dad did a great video on H bond
Well, I think he
recently.
actually, but I believe he actually ended up buying. He doesn't own any ETFs. Just over the years, he used to own mutual funds and ETFs, and I think his portfolio was entirely stocks. But I'm, to the best of my knowledge, I think he actually went out and added. I believe this was the exact one, or maybe it was HPYT, but he was, yeah, very optimistic on these
Yeah,
funds and
I
a very
mean,
very creative approach to yield. Wow.
to squeeze out yield off a boring asset class, right?
Oh
So
yeah.
these ETFs literally hold things like TLT and other Vanguard, US ETFs that hold US
Just true.
Treasuries. But because of the interest rate hikes, there's been a lot of volatility with these ETFs, and volatility is a covered call ETF, a covered call strategy's best friend, because the income comes from the volatility. the more volatile something is, the more income you can make when you're selling covered calls. That's why like the Tesla covered call ETF, for example, has a lot of yield. It's not because it's some sort of scam. It's just because Tesla has a lot of volatility. So it's pretty crazy. You can make 10% yield, and they're only doing 50% covered calls on. And like you mentioned, there's HPYT, which has like 15% yield. They're doing more covered calls. They're doing up to 75%, up to 100% coverage. So great, pretty cool solutions if you like fixed income, but you want to squeeze out more income. And Horizons launched three of them: a long-term one, a medium-term one, and a short-term one. So this is also another cool type of product that came out in 2023 as well, for us
Yeah, no
income
doubt.
investors. Yeah.
No doubt.
And just to finish off here, and I don't want to spend too much time on it, there's, Hamilton has been expanding their Maximizer series ETF. So they're very high yield. They're yield first. So they do covered calls typically on up to 50% of the portfolio. And now they're launching more and more in-house products. They recently launched a technology one, QMax. S-Max is their kind of like their overall US one. And I have a feeling that they're going to start changing up their HYLD and HDIV ETFs to include their own in-house products and lower the fees and enhance the yield. So some pretty exciting stuff from Hamilton as well. They're really, like Horizons, pretty much a breakout year for them. And last but not least, on the US side, I know, audience is mostly Canadian, but I think the craziest thing that came out this year has to be QQQY and JEPY. These are literally, NASDAQ 100 with covered calls, S&P 500 with covered calls, but they're daily options. So in 2022, daily options started coming out. You could literally write, it's only on the indexes for now, but you could literally do a 1-day option covered call or put on the S&P 500. So these guys do daily options on the NASDAQ, on the S&P 500, and we're talking, 60% yield, 60% yield. So pretty crazy stuff. Just remember that, on the X date, when they give out that big income, your capital is going to go down a lot, but you're going to get that big income. So personally, I got these in my RSP. I went all in on them, and I just have them on drip. So it's this crazy compounding effect over time with these. So it's just important to remember, 60% yield does not mean 60% return. There's a big difference between yield and return. So these are now, again, index options where very innovative. They're doing daily options. So it's just exploded in 2023, to be honest. Lots of cool options.
Too cool, man. I now those last couple ones to throw my head for a loop. Like I have to take a look. I had not have heard those till now. So I mean, I'll definitely check them out just for interest.
I have several
I definitely won't be
videos.
buying.
I have
You do?
several
Okay.
videos on them. The CEO came on my channel. I talked to her. I basically grilled her for like 40 minutes about them, explaining how they work. And I made another video recently where I literally put them in my phone next to the SPY, right? The S&P 500 versus JPY, the
Yeah.
QQQ versus QQQ1, just to see the behavior. And they really behave exactly like a covered call ETF, right? You're giving up some upside for a lot of yield, right? So based on the underlying indexes. So pretty cool stuff. I would say that this year is really like the year of the index style for income investing, that bunch of these index based ETFs have come out, which is makes sense because index investing is literally one of the best ways, no brainers, to invest, right? It's you got the best stocks all the time and you just buy the index and that's it, right? So pretty cool stuff.
Wow. Too cool, man. Well, thanks for highlighting those. As you're going through the list, I'll say I'm impressed by how well you remember all the tickers because they're all so similar and they're all so
I know
close
them all by
together.
heart. So I have
I can
OCD.
tell.
Unfortunately, I have OCD. I gotta, when it comes to the income world, I have to know what's going on.
Well, hey,
So
that's why you're the guy. That's why I bring you on the channel, man.
that
Because, like I said, it's if I have any followers or any subscribers that are watching this video, like that are interested in this, you are the guy to go ask. When I have questions, I ask you. I shoot you a text, like you respond right away. So
I
I don't
appreciate
even
that. Appreciate it.
yeah. it's really impressive and good for you for kind of staying up to speed with all this and showcasing some of the options. I think what's cool too is you actually showcased a bunch of options. You know what I mean? And then like for my audience, maybe there are some that resonate with you and some that are just like, oh, I'll never touch. For example, me, those last two options, I'll watch the videos, but they just don't, like I have zero interest for that. I'm sure there's a logic behind it, but it's way too complex for me. Doesn't matter. But you also showed a bunch of options that do look interesting, and I think that's thank you for highlighting those because, and again, my audience, go check out Adriano's channel. Go ask him his stuff because he knows better. Like you have all the resources when it comes to that, right? So
Yeah,
that's
yeah, and this
in
is
fact
really
you.
why I love do-it-yourself investing because I say it all. I try to make it a point on to say this on my channel more often. I am not against any style of investing, whether it's growth, whether it's dividend, whether it's income. What I do, I think they all work well long term. It's really how you get your return that's a bit different. But if you really look and break it down, like we saw, S&P 500, S&P 500 with cover call. It's the same exposures, it's the same stocks. You're just getting your return in a different way, and there's a lot of people that mix and match. They're hybrid, which is also cool. This is the
Absolutely.
coolest part of do it yourself investing. And when you start, it could be very overwhelming, right?
Mm,
Because you have a lot of options. Should I be a growth investor? Should I take income? If I go full income, what happens? I see my capital going down. What could I do? So
mm,
it could be very scary at the beginning, but do your research with time. You could experiment with different styles of investing, and I know you're going to ask me about this is literally why I created my digital product to help you get started. There's sample portfolios for not only income stuff but growth and dividend. I even have one portfolio that mixes all three in case
mm.
some people it's just like I don't know which one to choose. So choose a little bit of each, and trust me, after a year or two you'll
You'll
know which
know.
style
You'll know which one you like.
you'll
Well,
know.
hey,
Yeah,
why don't you speak on that? Because no, I'm excited to learn more as well. I mean, we've talked about your product here on the channel before, and like
yeah,
I've purchased your product going
I
back a
appreciate
couple
it.
years ago. And hey, like I said, I vouch for this guy. Like whenever there's any questions I have, I go to Adriano. So for any of my audience that is interested, at least take a look. Is it like a new version that came out?
Yeah, it's
You can maybe explain.
version 5 that just came out. And to be honest, the origin of this product, my past job in IT service management, I worked with Excel all day. So when I started investing, there was so many ETFs, so many options. I started to build an Excel file for myself just so I could
Mm,
keep my
like a
sanity and try
database,
to
yeah.
track everything. And it just got bigger and bigger and bigger. And eventually I turned it into a digital product because I started sending it to some people and they said, oh, this is really cool. And it just evolved from there.
That's
And
that's kind of how that's kind of how the best products end up coming to fruition, right? It's like you're just filling a need, and then all of a sudden everybody wants it, and then it just becomes actually
yeah,
what it becomes.
yeah, just trying to make it better and better. And new ETFs come out, I gotta add them to the list. So, and my intention is
Right.
I try to come out with a new version every year. Throughout the year,
Mm.
I've been kind of tracking. I just write down all the new ETFs, and then I'll add them, and I'll make the try to make the sample portfolios better. So I could give you a quick look at it. I'll show you the demo here
Please do,
real
yeah.
quick.
Please do.
So there's several. It is spreadsheets, and you have the tabs here. There's a little knowledge base my wife and I worked on, just terms, links, things that could help you get started. A lot of investing terms are quite difficult so to understand at the beginning, so we did that. But it's really the sample portfolios that I love, and there's 10 Canadian ones, 10 American ones, so
Mm.
all for different styles of investing. So I have an
Mm.
income one, for example, here where you literally have, you have a description for each one for who it's designed for. You have the name of the ETF, if it's an ETF or a closed end fund, the stock symbol, which are links you click, brings you to the fund's website. This is a recent addition, alternative options. So now there's so
Mm.
many similar options. I put some alternative options. For example, the H bond, we just discussed that, the fixed income one. An alternative option would be HPYT, right? As an example.
Yeah.
Quick description of the fund. And by the way, no single stocks here, only ETFs, only funds. A lot easier
Yeah.
for beginner investors. Percentage adds up to 100, and this is your a sample portfolio for an income investor, for example. And we added nice little pie charts, and this is just portfolio one. We have portfolio one streamlined, so if you want a slimmer one,
Mm.
low volatility income. Some people are a bit more conservative, more defensive, so I added some more defensive options in this one. Maximum income, if that would be more geared towards someone like me who has a bit of experience with income and they just want like 12% plus yield. But there's also a streamlined version. There's also growth, just total return, give you some of the best index options here. Aggressive growth, maybe some with leverage, right? Each EQL, you could see that it's in there because it kind of falls under the aggressive growth. Also dividend, very popular style of investing. I give some examples of some of the best dividend specific ETFs, which only hold dividend stocks all around the
Yeah.
world. And then there's the mixed strategies one, which has a little bit of all three in a streamlined version, and the exact same thing on the US market. So 10 portfolios each. And I think, in
When
my opinion,
when
this
you
is the
say that,
best part of it.
oh yeah, the best part of it. I was gonna say the US. So who would this be for? Like, would this be for Canadians looking for US exposure in their
It would
RSPs? Would this be
be
for American viewers? Yeah.
it would be primarily for American viewers who or outside of worldwide, of people who invest on the American stock market, but also good for Canadians because, as you know, when you buy US stocks in your
Hmm.
RSP and Lira, there's no
Hmm.
15% withholding tax. Uh,
Right.
and also, I know you have a lot of videos talking about, like, it's okay to buy US growth stocks in your TFSA in your margin because there's the 15% taxes on the dividends, not there's no extra thing on capital gains. So Canadians could
Talked about that lots.
benefit
Yeah.
from the US portfolios as well, especially the growth one if you're looking to
Hmm.
build your TFSA, for example, with
Hmm.
some US funds. So it's mostly for Americans, the American ones, but also Canadians as well.
So for
And
clarification for my audience, if you looked at the tickers, for example, here, these would all be US traded funds
yes,
versus
exactly.
in the other one, they'd be Canadian traded, VFV versus VOO, et cetera, et cetera.
Yeah, Canadian
Okay.
traded, but it doesn't mean it's Canadian
It
companies.
owns Canadians. That makes sense. Okay, totally makes
Exactly.
sense.
Yeah.
Yeah, gotcha. Really
Exactly.
nice. This looks beautiful, by the way. I
Yeah,
haven't
my
seen this
wife
updated
worked
version.
on
This
my
looks
wife
awesome.
worked on the graphs and
Visuals.
everything. And by the way, we put a link where you could do your own graphs differently if you want to. So
Mm.
at the top in the final version, you could actually click on the link and it brings you to Canva, and you can make your own pie chart however you want to design it. So that's pretty cool. And then there's other tabs where it's lists of ETFs. So this is really okay. Let me do individual research on some ETFs. I have very useful filters. You could filter by sector, by region, if it's covered call or not, if it's US listed or not, if it's
Mm.
designed for growth, or is it designed for dividend, or is it designed for income, with a description of each one, my opinion on which ones I would consider, whether it's all three strategies.
Mm.
I added this one. This one is new. If I have a specific video on you could
Mm.
watch the
Nice.
video. I added that. And again, the hyperlinks are all there. You click, brings you to the fund's website. You could do your own research. So I think of it kind of like a beginner reference tool guide to really help you get started and give you, the sample portfolios. I know some people will just get them, but I'm not really trying to say these are the best, or I'm recommending them. I'm trying to give you an idea of how to get started so you could get started, start your portfolio, because as you know, it's important to get started as quickly as possible. And yeah, and there's portfolio
The
blank
list goes
portfolio
on.
templates as well.
Oh,
You could
cool.
plug in your stuff. I have two of them. This is the one I use personally and I unveil every month. So if some people like it, you could just plug in your numbers and plug in your funds. Last one is a broker list, give you some ideas of some popular brokers. So it's kind of like a reference tool, like I said, to help you get started. And a lot of great reviews. It worked on it hard this past year, and it's not expensive at all. It's $99 Canadian, which is like $14 US or something like that nowadays. But it comes with lifetime updates. So I don't want to charge people every time a new version comes out. You buy it once, that's it.
Yeah.
You have access to all the next versions, and hopefully we'll go up to version 100. My intention is to, well, 100, and I'll be like 105 years old. That's impossible, but I'm gonna try to release one every year with updated stuff. Yeah.
That looks impressive, man. Well, hey, way to go. Like that's the way I see it is like a database resource tool
Yeah,
guide. It's kind of a big a big collection of that. And like you said, whenever there's like sample portfolios similar to my stuff, when I do a talk about something, it's not to be like just, hey, do this. It's these are just these are help they help formulate your own ideas like you just said. And I mean for that price it's I mean, hey, it's a like it's $100. It's a literally $99 and you're getting lifetime access. That's if you're in the space researching this, like I think it's a well worthy investment, even if you don't like it. Spend $100 to check it out and be like, hey, I don't want to use this. A
yeah.
hundred bucks to help get you that the result. It looks super well done, man, and like
My
obviously
my
a ton of work has
yeah.
gone into that.
I personally started it to save myself time because once you hit
Yeah,
fire, once you hit financial independence, you're in a better place financially. You quickly realize time is the most important thing, your most important asset. So my intention is really to help newer investors, even veteran investors, save you time because let's face it, there's a million YouTube channels now. There's a million
yeah,
gurus out there. There's a million websites and there's just a
yeah.
million things. You could quickly get overwhelmed. So I just try to keep it simple. All investing strategies are in there. And like you said, it's not like just buy this. It's try to get you some ideas and some inspiration to get started at least. Yeah. So
Yeah, looks so valuable, man. And how can people go find that? So if someone wants to go, for example, purchase that, where would they go?
on my website, passiveincomeinvesting.ca, if you don't mind, you could put the link in your video description
Okay.
and you bang, you pay for it and you make an account on my website. So, and you could just re-download it anytime you want. When a new version comes out, log back in and you download the new version for free. Super simple, super easy. You don't need Excel as well. You don't need the Excel license to open it. You could go to Excel online for free. Just Google free online Excel and you could open it with Excel online for free, or you could use Google Sheets as well to open it. If you have a Google account, a Gmail, you'll have access to Sheets, which will open an XLS file, spreadsheet file. So that's pretty much
Should be
it.
accessible to
Yeah,
anybody unless they're living under a rock. And
pretty much. If you have the internet, you don't need you don't need to buy the Excel license to open it. Yeah, so
too cool, man. Well, hey, I'll certainly link that down below because, like I said, it's I appreciate you sharing these new ideas with our channel and going over that
always a
demo and
pleasure.
even answering some of the questions up front because I mean it's yeah, it's obviously a polarizing space and you get haters and naysayers. I like the fact that you're willing to just come out here and just be transparent and address them. That's like you're my good buddy, and it's like I would happily vouch for this because I like you and I think it's a very value add product. To
I
my viewers and
appreciate it.
subscribers, go check it out, man. The work that he put into that is a very, very big time saver. You can just see even from that demo. So, hey, thank you for coming on, Adriano. If there's any last things,
No,
hey,
it's
pleasure.
my pleasure. I would say the question your audience is pretty smart because those are the tougher and most common questions and concerns I get, and they're completely valid, completely legit. And yeah, I mean, the income style investing is not for everyone. I would say it's in the end, we got to be honest. Covered call the bread and butter is really the covered call strategy. This strategy is not designed for total return. I will be the most honest and upfront about it. If your number one priority is total return over time, you're not going to get any covered call ETFs.
I
Period.
literally
You're going to
think
stick
like
with
that
the indexes, most probably lower fees. Covered this
like
stuff is really
that that
designed.
that that sentence alone, if that was the headline and people understood that, I think there would be no issue with this entire space. But I think people don't understand. People don't listen. They don't like, you know what I mean? That sentence, if you're listening, just replay that back. That is that's all encompassing to, and I think that's why people they come in with the wrong expectations and they get a bad rep. It's
We
I
got to
think you
be
nailed it on
honest.
the head there.
We got to be
Yeah,
honest. I don't buy these ETFs for total return. I buy them for income. They are
and that
designed
is
for income primarily and to lower your volatility. Now, that lower volatility, what exactly does that mean? It means several things for different people. The way I look at it, it lowers the consistency of your returns because if you just buy S&P 500 or TSX 60, one year you could be up 20%. Next year you're down 10%. Next year you're up, you're nothing. So the average long term is about 10%, right? But every year could be the volatility is higher. So with these covered call ETFs, since most of the return is the income and it's paid out monthly and it's almost typically the same amount, I think there's less volatility, there's more consistency with your returns,
Mm,
which primarily, if not all of it, comes from the monthly income. So they're
right.
really designed for income, not total return. And that's fine. I'm okay with it. It suits my lifestyle. Maybe it doesn't suit people watching, and that's okay. It's all that's the beauty of do it yourself investing, right? You do what you need. So
Absolutely, man. Hey, I 100% in agreement there, and that's why I said happy to have you on the channel to highlight what you do, and hopefully our viewers can use their brain to say, hey, what do I resonate with? But hey, let's do this again some other time. And if you guys have any more comments for Adriano, leave them down below because we'll look at them and we'll clip them. And then the next time we do this, we can have another session where you can come in here and answer some questions because it's been super valuable and it's good to have you back and back on the channel. And thanks for spending the time,
anytime.
Adriano.
Nice to talk to you again, my friend, and talk soon. Keep in touch. Keep up the good work on the channel. I know it's mostly your dad now, and you changed the name. I think it's pretty cool. It's a cool idea you did that. It's always good to transform and evolve with time. But your dad does a good job, and of course, when you come on, it's always special because it's so rare now. But I really meant what I said. You are the OG. You're some of the first videos I watched that helped me understand that bloody 15% tax. I will always be grateful to you, and I'm sure your audience members love the education you provide. So keep up the good fight, man.
Cheers, bro. I'll pass along a good word to my dad. He's the true OG. But
Next time you should
thanks, man.
invite him on. We'll have a conversation. We'll because yeah,
Let's do a
it'll be
three-way
fun.
next. That will be fun. No, next time we'll do all three of us. So yeah, thanks again, guys. If you enjoyed, give a thumbs up. Links will be down below for everything. Subscribe. You know where everything is. And as always, thank you guys for watching. See you in the next video.